Good morning, everyone. My name is Brent Gall. I'm the president of the Yankee Model Investment Club meeting. Welcome to our January 2021. Made the first date error of the year. Hopefully this will be an interesting year. So we'll start it off right with a nice investment club meeting. I have a couple of slides I go through at the beginning of each meeting just to orient new attendees. So if you've seen these before, just I guess take a break, have a drink of coffee, and then we'll start our regular club items very shortly. But just as a background, Yankee Model Investment Club, it's a better investing model club, which means we're a fully functional club with real money, but we are open to observation by members of the public. We were formed back in 2008. We're currently 6 members spread across 4 different states, and we went online starting back in 2011, and we meet monthly second Saturday at 11 a.m. Eastern. For new members, we're currently looking for new members. We don't require any investment experience. We offer mentoring by an existing member, and there's no limitation on where a new member would live other than if your state tax laws require the club to file a return. For all existing partners, you must be a member of Better Investing. You're expected to actively participate in the club activities. This isn't a passive investment vehicle, and make stock presentations using our stock selection guide and our Excel analysis tool in rotation with the other members. So with our 6-member headcount, that means we each present a stock twice a year. For general operations, we follow the Better Investing principles. We show respect to fellow club members. We all remember that we're still learning here. None of us are experts. We perform an annual audit of finances, which is actually what we'll do at the end of today's meeting. We file tax returns promptly and follow our partnership agreements. If there's any questions, if you're interested in joining or anything else that comes up, any other items that we don't address during this meeting, feel free to contact our new secretary as of last month, Sriram. I put his email address there, and I'll put it back up on the screen at the end of the meeting. For the structure of the meeting, we follow a standard agenda. It should be in the handout section of the GoToWebinar control panel on the side of your screen. During the meeting, all visitors will be muted, but feel free to type in questions using the questions box on the control panel as well. Joe is our moderator, and he'll be replying to those questions and can speak up if there's a general topic that's brought up that's of interest to the larger audience. There's other handouts in that section as well, so feel free to browse through those. For suggestions for educational topic, in a few minutes, I'll give the floor over to Ira, who'll present today's topic. But generally, it's a 5 to 10 minute presentation we do monthly on a topic of the presenter's choosing, from financial terms to industry to analysis tools, or other information that could be helpful to our members and the audience. We're not following any form of a syllabus, so we're open to suggestions by you guys. Ideally, we want to present information that's helpful to the most people. So feel free to offer up your ideas in the questions box on the control panel. We've received these 3 ideas so far, and we won't guarantee that we will cover them, but we certainly can use these as inspiration when we choose our topics for upcoming months. Regarding registration for the meeting, if anyone is joining us today from an email that was forwarded by a friend, we don't have your contact information, so you won't be getting reminder emails for future meetings. So if that's the case, feel free to go to the Better Investing website shown on the screen and register yourself, and therefore you'll get a a reminder email, I believe it's 1 day and 1 hour before our scheduled meeting time, as well as be notified of any changes to the meeting schedule or time. And again, I'll put this link back up on the screen at the end of our meeting in case you need to follow that. And then just a disclaimer about the content presented today. We will be discussing financial topics and potential securities and companies. It's by no means recommendations for your own investment strategies, so do not take it as advice or recommendations. Do your own research before you invest your money in any of the companies that we talk about today. And then with that, we'll jump to our main agenda for the day. We'll move on to the educational segment that's presented by Ira, Return on Equity Exposed. So Ira, I will give you presenter rights.
Okay, you see my screen?
Yes.
All right. Well, before I get into return on equity, just today's market quiz. What member knows what a SPAC is? S-P-A-C. Anybody? And what's the significance of it?
Special Acquisition Corporation or something.
All right.
It's a company that forms to say, we're going to do something. We're going to buy some company or start some company, and we'll tell you what later.
Right. They go public
Yep.
with the goal of acquiring a company that will automatically become public without doing an IPO.
This
What's
is
the
those
risk of that?
blank, I think I've heard them referred to as like blank check companies or something, right?
Yes.
Right.
Yeah.
What's the risk? Anybody? To the
Well, you don't know
investor.
what they're going to do. They on purpose don't tell you what they're going to do. And then the costs or the profit that the founders make can be immense for little or no investment of their own capital.
Plus, there's no lockup of shares,
Yeah.
so they could sell right away.
Yep.
Okay, moving on. Return on equity. Time is short. What I'm going to do is I'm going to go into some of the components of return on equity. I have the in the handouts is my PowerPoint, and there's also a more detailed PDF. So this is the definition of return on equity. Net earnings per share over book value per share. And book value, which is assets minus liabilities minus preferred stock over number of shares. So there are three components which I want to talk about. There's pre-tax profit margin, which is explained here. I don't have to read all the screens. I'll just put them up here. Just to remind, assets is book value plus liability plus preferred stock. In other words, assets is equity and debt. There's a concept called turnover. Revenue divided by assets. This is significant. It's a measure of how efficient the company is. How well is their revenue being generated versus their assets? Then we talk about leverage, which is assets divided by equity. So leverage is the debt, basically. Now leverage is you could say is a two-edged sword. I mean, it's good to have debt to a point, as long as they control the debt and they could service the debt. But the higher the debt, obviously, the riskier it is. So there's something called the DuPont equation, which is return on equity is basically the net profit margin times the turnover times the leverage. And if you look at the equation, you could see that revenue would cancel out, assets would cancel out, and you would be left with net earnings divided by equity. So this is a very, very quick summary of components of return on equity. Now, I have a PowerPoint, which I have a PDF, which I did not do, which I will open up briefly. And you could look at it and get a much better understanding what the heck I'm talking about. So let's see. Escape. All right. This was done by Gretchen Hurd, a longtime BIFA board member. I'm not going to go through the whole thing. I just want to show you some of it. Let's see. Now, on this slide where they say these are the two jobs of management. Well, last time I spoke about ESG companies concerned about the environment, social management. In today's world, I think that's important that management has been looking beyond these two things in what a successful and socially responsible company is about. I just wanted to point that out, that I don't quite buy this slide totally. Like I said, I'm just going through this quickly just to show you what it has on it. You know, I think it'd be best if you look at it on your own. So it states here that an excellent return on equity is 20%. And a good return on equity, average would be 15% or above. And this is what I was talking about: net profit margin, turnover rate, and financial leverage are the three components of return on equity. And then she goes into examples of each one of these. So where do you get these numbers? Well, if you have Morningstar,
Muted.
Jack is going to be talking about his company, Emergent Biosolutions. I went into Morningstar, and you could find in Morningstar profitability. It has the asset turnover number. It has the net margin. It has the leverage numbers. You multiply those together, you get the return on equity number. So that's one source. You could also get it from the 10K if you want to do the math yourself. And the other thing, Value Line often has screens that they present each week. Here's one that they just presented the other day, is stocks with high return on equity. And that's what I have. You know, time is short here, but like I said, if you look at the PDF, you'll get a better understanding of it. Any questions?
All right, thanks, Ira. One thing that has always stuck out with me, and you mentioned it, and I believe it was in Gretchen's slides also, is a reduction of return on equity could be that the company is actually paying off long-term debt, so they're being less leveraged. Conversely, an increase in return on equity could mean that they're just going into more debt, which, even though one metric is improving return on equity, additional debt might not be such a great thing from a balance sheet and general financial health standpoint. So I've always viewed that metric on the SSG kind of with a grain of salt, just because there's kind of an underlying factor there that may work against you in the future.
Exactly.
Any other questions, comments from the members? Okay, thanks, Ira. Why don't we jump to secretary report? So I will give the way I figured it would go. I think that Jack mentioned is Jack will present last month's meeting minutes as his last active secretary as he takes on the treasurer's role, and then Sriram, you'll be taking the minutes from this meeting going forward. So next month you can present the minutes from today's meeting.
Unmuted. Muted. Unmuted.
Oops. Okay, you can see my screen.
Yep.
Let me make this a little bigger. Okay. So last month we had 47 visitors out of 234 registered. None of our prospective members attended last month. Sharon was on National Guard duty, I think she said. The November minutes were put in the public folder, which I have here. Treasurer's report was accepted as presented. The preview positions as of 12/11 are here. The total amount of money, market value is about 182,000. Diversification was this. We want to be a little higher. We wanted to be a little higher in small, a little higher in medium, and a little lower in large, but we're not too far off from any of our goals, a little bit unbalanced. I represented Sprout Farmers Market. This is the SSG and presentation spreadsheet are here. You can click on those if you want. We decided to sell Essent to harvest the capital loss. It was down about $1,300 or so. Let's look up here. It's what it was. Yeah, it's about $1,500 in losses that we tried to harvest, with the idea that we can buy it after the wash rule passes. I think after 31 days have passed, then we can buy it. And then we decided to buy Sprout Farmers Market up to 21 bucks, up to about 4 or 5%. I think we ended up getting about 4.5% of that. We'll see that in a second. There was no education segment last month. I was going to just presented his, and I'm going to present the stock study. I put the link up to December's video on YouTube. The becoming a member info sheet is, I don't think we discussed it much last time. It's up for comments and revisions from the members if you want. November, we had a limit order at $32 to buy Miller, but we ended up not buying it. It didn't trigger because it never went below 32. Never went to or below 32. So we canceled it. Sriram presented the reasons to sell checklist, which I think we're going to discuss today. He gave us a revised one, I believe. We elected officers. Brent is president. Steve is the vice president. I'm now the treasurer. Ira is now the official assistant treasurer. And Sriram is the secretary. I say here this slate was elected by acclamation. Brent's volunteered to be mentor for Sharon Watkins, and they've been working on that. So the visitors had some questions in December by visa. It wasn't in the buy zone. And then we talked about, one of the visitors talked about other articles about when to sell. And needing money is one of the things that they pointed out, which is true. If somebody withdraws or even withdraws part of their money, then that's in order to build a house or something, then that's a perfectly fine reason to sell. And there was an article in Better Investing last summer on time to sell. There was a question about whether we're going to go to Bink. It turns out Bink is now in October. Is that right, Joe? I think so.
That is correct.
Yeah, October 2021 in Dallas.
Yes.
So that's it for the minutes. Okay.
All right. Thank you, Jack.
What's up next?
I think it might be you also for Treasurer's Report.
The Treasury Report. Okay. Let's look at Bivio. Accounting reports. So we'll look at the valuation. Here you can see that Essent was successfully sold. It's not here. And Sprouts we bought 429 shares, about 4.4% now of the portfolio. And following our protocol, we've lost money in the first month. So
Everything's as it should. That's good.
yes, yes. So here are the percentages. We have a fair amount of cash because we sort of held on to some of our earnings from selling Essent. So we have 9,000 in cash. That's about 5% of our total money. We're up to 190,000 now. So that's we gained about $8,000 in the last month. So that's not a bad way to do things. Okay, member status. So you notice this first guy didn't submit his money. Everybody else is up to date. Jack's going to submit some money soon. The check is in the mail. Yeah. Transaction history. Oops. Sorry. Start beginning last month. Last month. Yeah, I'm working on it. I'll get there. Now what?
That should be right.
It wants me to do the same date, so hopefully.
I don't remember that.
Yeah, me neither. 12, 31, 2020. Okay, so this is what we did last month. Nothing happened much this month except a couple of member payments. So we sold Essent for we got $15,000 give or take. And we have, at least at the moment, harvested this $1,500 in loss. We got a few dividends from Visa, Tractor Supply, Essent, and Miller. So this was my last month's payment that showed up, but I still don't have this month's payment in there. Okay. We got two of Liz Tobin's payments, but everybody else is okay. All right. Let's see. Look at the performance benchmark. So compared to the S&P 500, we're a little behind 0.3% for the life of the club. If we go to shorter term, see how we're doing. We're behind by 0.4%. Still in the neighborhood. 19. I would settle for 19% gain any old time. Okay. Investment performance. So Middleby's doing gangbusters. Intelligent Systems, Tractor Supply, Dollar General, they're all doing great. I guess we haven't owned Miller long enough, quite long enough.
I think you set the software up for 90 days.
Yeah, Yeah. Okay. And we just bought Sprouts.
Yeah.
Okay.
It'd be longer than 90 days.
So if we look at member performance, yeah, I guess Sriram and Liz haven't been members long enough to show up yet in this. But again, these details will give you a better idea. Yeah, so they've been making some money. Everybody else is making 14%, except for me, I'm making 16%. Pick the right time to invest, I suppose. I guess that's it. We should look at capital gains and losses for 2020 to see where we stand, so you know what's common in your K1s. So we have a short-term loss of $516 and a long-term gain overall. And here's moderating that somewhat of $4,500. So that's not so bad. Okay, so you'll have to pay the tax man something. So we don't have our 1099 int yet, but this is the report that, no, I need to do the right year, sorry. This is a report that'll help us figure out whether the report we get from our brokers is right. And this is the, so we made $850 or so on dividends this year. A whopping 9 cents in interest, basically on money market. I guess they're called dividends now because it's a money market. Okay, and that's it for the treasurer's report, I believe. Any questions?
Looks good. Thanks, Jack. And I'm assuming you and Ira are discussing offline doing the taxes. Is that something that you're taking on for this year, Jack? Or
Yeah, and I'm going to need Ira's help, but I think we're pretty good for that.
okay.
I went to a seminar, online seminar about doing that, so I think I'm on board. Bivio has some help stuff as well. Okay, let's see, what are we doing?
We're continuing the Jack segment onto stock to study.
Okay, so I'm going to present Emergent Biosolutions. It's a CDMO, which I didn't know anything about, a contracted drug manufacturing organization. They do have some things that they develop on their own, as well as contract for other companies. This little blurb is essentially from a couple of value lines that I merged together and a couple other things. They have 10 offerings, including vaccines for anthrax, smallpox, typhoid, and cholera, as well as a lotion that neutralizes chemical warfare agents and an emergency treatment for opioid overdoses, Narcan. It also has about 10 marketed. All right, so those are the 10 marketed FDA approved things. It has other things, about 10. They're in various stages of approval. I think there's 1 or 2 things in phase 3 trials, which is the last phase. So Emergence won $1.5 billion worth of contracts since March 2020 in response to COVID-19, mostly for therapeutics and phase 3 trials and vaccine supply chain and addressing vaccine supply chain issues. They are collaborating with, I think, the Pfizer vaccine and the Novavax vaccine, which has not been approved yet. Pfizer has emergency approval. Emergent also delivers an anthrax vaccine for the Strategic National Stockpile and a smallpox vaccine. So you might ask yourself, why do we need a smallpox vaccine when smallpox has been eradicated from the face of the earth? The reason is because the bad guys, terrorists, or countries that want to be terrorists, are the source of potential smallpox infections. Same thing for anthrax. There was an anthrax attack on government officials through the mails, as you may remember. Was that a decade ago or so? Longer than that? Okay, so that's what this company does. It's got headquarters in Gaithersburg, Maryland, and manufacturing in several places in the U.S., Rockville, Baltimore, Hattiesburg, Mississippi, and Lansing, Michigan. It also has manufacturing in Winnipeg, Canada, and Bern, Switzerland. It's been on a tear of purchases of companies, so that's how they got some of these assets in far-flung places. They have 41% of their capital in debt. It's a little higher than we'd like. A third, 33% is kind of what the rule of thumb is that I have in my head. Morningstar doesn't have some data about them, although I think Ira showed us some that I missed. They do say it's got a narrow moat, which makes sense for a contract drug manufacturer. Their 5-star price is 68, and their one star value is $78. It's now, I think, what's the present price? I think it's $100. Is that right? All right. I think that's right. We'll see the SSG in a second. Yeah, I think it's $100. Okay. Value Line has them at 17% sales growth and 32% earnings per share growth. Timeliness is 4. So these guys peaked at 100 and something, 120 or so in the fall, and they've come down since then. So that's what. So they view that as the COVID bump from their big $1.5 billion in contracts that they started getting as of March. Safety and technical are kind of in the middle. The annual expected return is between 5% and 17%. CFRA doesn't have a full workup on them, but they rated a buy with a fair value of $78. So I have future sales at 17 and future SSG, future earnings per share at 28 on my SSG. So let's look at the SSG now to see how that happened. Where's my SSG? Okay. Let me make this a little bigger. So this is Emergent Biosystems. The the lines are not your up, straight, and parallel ideal. Things are going pretty well, actually, up until 2017, and then sales went up, but earnings and profit went down until this year, when earnings and profit went way up. So this little bump we need to look at. What happened there? So these are the numbers that I got, but let's look at how I got there. 17% was right from the SSG, but we'll look at the 28%. It's what the preferred growth says it's going to be, but how did I do that? Because if we put in the defaults of 15% pre-tax profit margin and 29% tax rate, then we would not get we'd not get this number. So this came from putting in what Value Line said projects the pre-tax profit to be in 2023, 2025, 28%. And the tax rate is going to go down, they say, to 21%. So with those two changes, 17% turns into a 28% annual growth rate after 2025. Okay. So this is the pre-tax profit. So let's see, how do we do this? There's a chart of this someplace. Where is that? Is it here that I can make the chart?
Go to the left.
Left?
No, you went too far. One more. One more. There you go.
There we go. So this is the history of their pre-tax profit. So they've been making, so something bad happened in these 2 years, 2018 and 2019, and they have been, as I said, on a tear of acquiring companies. Let's see, look at debt. And debt went up in 2018, 2019, or 2018 stayed high, and it's still high. So I think what happened is they bought a bunch of companies, perhaps the ones in Switzerland, in Bern, Switzerland. And that's how this came up to 20, whatever it is, 28. So basically they're a different company than one that was making 1.5% pre-tax profit. Where'd that go? Yeah, it was making 10 single-digit pre-tax profit. They had been making 21% pre-tax profit. The Value Line says that this is going to go up to 28% because of their acquisitions. All right, so let's go back to my presentation sheet here. All right. So yeah, the history shows a downward trend for pre-tax profit margin, although it has gone up this year, and Value Line projects it going up over the next few years as well. And earnings on equity has also gone down. The PE history is here. So the risk for this, for EBS is pretty high. Debt is a little high, and we'd like it to be less. The quick ratio is a little low, 1.39. You'd like it to be 2-ish. I didn't write it down here, but the Altman Z is 3.65. So I think over 3 means it's not going to go bankrupt right away anyway. So Value Line said in one of its missives that the COVID windfall may not last. And that's why they put it on a timeliness of 4. And they also warn about profits being sure only through 2021, and they're less excited about the long term, they say. My feeling, though, is that COVID-19 is not going to go away by the time we all get our vaccination sometime this summer. That it is going to be more like the seasonal flu shot. We're going to need a vaccine every year or so. And we may need a brand new vaccine, as the seasonal flu does, because there have already been several mutations of the virus observed in the UK and South Africa, and I think I saw a news report that there's a new variant here in the US that's been found. On top of that, novel viruses from bats and other wildlife will continue to move from the wild to humans. So a contract company like EBS that can respond quickly to somebody else like Pfizer's needs for assistance in producing 1 billion vaccines or so is that's going to stay for the long term. EBS is also uniquely suited to respond to terrorist threats from weaponized diseases like smallpox and anthrax. This terrorist aspect of their work is not going to go away either. And finally, the opioid epidemic has been, if it weren't for COVID, everybody would be screaming about how bad the opioid epidemic is, which of course, because it's because of the lockdowns and the number of people out of work, it's been exacerbated by the epidemic. 80,000 people died this year from an opioid overdose. So Narcan is a potent weapon. Against that, and these guys make it. So I project a high price on the SSG of $309, low price, which happened, I think, last year, of $39. So the buy price is up to $106 on my SSG. It did this again. It's not 14 to 24. My computer seems to want this to be a time. It's, well, let's look at the SSG and we'll find out what it is. Okay. 3.6 to 1. I don't know how it got 14 something out of that. And a buy up to $106. Annualized price appreciation of $26 using the high price, the high PE, and 20%. I'm sorry, 26% using the high PE and 20% using the average forecast. See if there's anything else on this. I want to show you. Yeah, so I recommend buy. Oh, Peg and Peggy are 0.9. So that's decent. Okay, any comments?
Thanks, Jack. I just had a
Hey, Brett.
few. Yes.
Bonnie asked if we could get a copy of this template available to the attendees. If you'll send it to me, I'll try to add it as a handout.
Okay,
Send it as a file, not a PDF, but as a Excel file.
all right.
Why don't Jack, you want to do that while we maybe go over the current holdings?
Yeah,
Okay.
okay,
Just since we can still see your screen.
yeah, right.
Regarding the company, it sounds reasonable. I agree with some of the advantages that you list about its portfolio of vaccines, and you bring up a good point that even though we may have eradicated some diseases, that doesn't preclude the risk of nefarious agents using them for, threats against different countries. So that's a good point. I guess I had when I was going through the SSG though, it was I guess justification for fairly high growth rates of particularly the earnings per share and the PE ratios. So I think that, looking at the front side of the SSG with the growth rates of the revenues, I put them at, I think, close to you. I think you had what, 17% or
17,
something.
yeah.
I did. I judged it down a little bit to, I think, 13%. But the earnings per share was where I kind of stumbled because, I've been stuck in the rule of thumb of not banking on an earnings per share growth rate that is much higher than your revenue growth rate.
Yeah.
So when we do like a 28%, and it was kind of funky looking at the charts where
Yes.
2017 to 2019, the pre-tax profit has kind of fallen off a little bit, and then it jumps back up. But I don't know that we can bank on that sort of miraculous recovery over the course of 5 years. So that was kind of one point that gave me pause. And then the other thing was the PE ratios historically, like the last 2 years, a low PE of 35 or so and a high PE of 60 to 64, which I may need to recalibrate, my
Yeah.
My standpoint, but those seem very highly priced, and maybe it's
So
reflective of. Go ahead.
So I eliminated those from my SSG. I think I forgot to tell you that. Yeah, so you can see that they're just gone. So my PE, high PE was 28, low was 17, which are basically
Okay.
from the first 3 years of this, 2015 through 2017.
Gotcha. Okay, yeah, I think I was actually even a little bit more generous. I put it, the high PE is 30.
Yeah.
Low is around, low 20s or so. And I think that the main way that we deviate then is the earnings per share growth. That's when you cap it at like 13% or 17% like I did. It's a much smaller 5-year high price. Like it's well in the sell zone for me. But
So if
there might be underlying things that analysts and the industry and the market feel that this is a great kind of recovery story to price it as that.
I think the event that caused this thing here is the $1.5 billion in orders they got for COVID vaccines from Pfizer and Novavax, for Pfizer and some other stuff. But that's COVID related stuff. They have a therapeutic, which I think I mentioned, but that's one of their things that's in phase 3 trials, a COVID therapeutic. So that little blip there from the second quarter or the first quarter to the second quarter, that's COVID related stuff.
So are they making Pfizer's vaccines for Pfizer? I kind of
They're
read into
making
it that they were.
so they talked about it as a supply chain issue. So they make some of the junk that Pfizer needs to make their vaccine.
Oh, okay. I read it to be that they were trying to compete and coming up with their own vaccine. Oh,
No.
okay.
So they're doing the same thing for Novavax. So when you scale up from 0 vaccines produced to 1 billion vaccines produced, then you have to have more vats and stuff to do whatever it is you're doing. So Pfizer doesn't have those vats, and so these guys have some of those vats to do that. So they're not making the vaccine, they're making the stuff that Pfizer uses to make the vaccine.
Gotcha. Okay. Okay, well, I guess even so, I would wonder if, 5 years' time does not allow at least one competitor to scale up and, buy additional vats or,
Yes.
or whatever that would eat into that. I can't quite see it on your screen, but I think it's around 28%, earnings per share growth,
Right.
or even eat into their revenue growth also.
Yeah, 20%.
Yeah.
Yep. So if you scale this.
I had some of the same concerns of Brent. If you go to FinViz, you'll see the 5-year analyst consensus earnings is 9%. No, not double digits. So if you go to research, go to FinViz, you can see they have 9.2% next 5 years. Also, if you start your projection from the trend line and not from the current blip there, I think you'll get a very different number. I think it's quite likely we will revert to the mean over the next 5 years. So you could do, if you want to switch to the trend line, you could see. Now, I did get a buy. I got the very top of the buy range using some numbers similar to yours, Jack.
Yeah.
I'm concerned also, if you go to quarterly data, you'll see a negative number there.
Yeah, I didn't see that.
What's the story there?
On that.
The earnings per share down 12%. Pre-tax profit down 6.6%.
Yeah.
So I think, in view of the consensus earnings, in view of, I don't think the COVID blip will necessarily be a long-term trend for them. So I have some reservations about it for those reasons. Also, they're highly dependent on the federal government as their sole
Defense
source of
Department.
revenue.
Yeah.
So
Exactly.
they're not really diversified in that sense.
They have defense. They have very large Defense Department and HHS contracts.
Right, but their main profit from that is not at those high numbers.
Yep.
That's what I have.
I guess I was impressed by these 4,000% earnings per share increases.
Yeah, I am also. I don't know that will last. Okay. Steve, you have any comments?
Yes.
Okay.
So I'm going to preface this with, sorry, Jack. So you know how it's going to go when
I do know how it's
I
gonna
start
go.
it with that. Okay. So, so I get my data from Stock Central, so it automatically populates my SSG because I'm lazy. So what it populated with was 14.5% future sales growth, which from what this seems reasonable, but 0% future estimated per share growth. So, okay. So then after hearing this, just for ha-has, I put in 14.5 per earning per share growth with all the settings from Stock Central. And it's still not even in the buy range. My buy range is 62.2 to 92.6. And this thing's flying at 97.23. So, I mean, I think I gave it the benefit of the doubt there. And then at least on the what's the name for it? Technical fundamental kind of a thing.
Yep.
So, and then we'll get into my fundamental reasons where I'm having grief with this. So, April earnings of 2020 negative. April 19th earnings of 2019 negative. January of 2019 negative earnings. So very recently we've had negative earnings. Now they weren't negative all year. That's why the graph doesn't go to zero. But they had very bad quarters, and that's why you see that giant dip. So, it's just, to me, that's a quality thing that I don't want to take that risk. So, and not shockingly, that's wrong, but I guess I wasn't expecting to get agreement on this, and I have with Ira and Brent, where I actually see this as a temporary COVID lift. Even if the more contagious mutation, the B117 variant, so what I'm trying to say is you've got, for lack of a better term, regular COVID, which is horrendous. And then there's this more contagious mutation, the B117 variant. So let's say you get 2 cycles of COVID, right? And of course, they're contract manufacturers. This is what they do. They give scale to the labs, and well, after COVID round 1, that scale is going to be there. They're not going to get any more. They're not going to get any more. The infrastructure is going to be in place. They're not going to get another giant lift like this 4,000% rise. So I think that they're going to do okay, but you're not going to see growth like this. And I think Ira says it best, where you're going to get a reversion to the mean. Also, because I'm partial to reading 10Ks lately, they are a lot of Narcan sales, which I think is, it's helping people that are addicted. It's wonderful. It's all great. Well, I have a very different take than you on the Narcan, and I'll explain my reason why. So Narcan reverses a fatal overdose kind of a thing. So a lot of this was due to Purdue Pharma. So those people got hammered, right? And now, in other words, the source is drying up. It's still there, but it's very, very hard to get. And let me tell you how hard it is to get. So my dad has stage 4 prostate cancer. So when he goes to the doctor, hey, I'm in a lot of pain. Oh, no, we can't give you anything. What do you mean? I've got cancer. Give me some. Oh, no, you have to go to a doctor that's going to give you a very painful injection to block it. We can't give you any narcotics at all. What? This is the level of people not prescribing. people that are borderline hospice. He's not in hospice, but it's not far. So aren't getting this kind of medication. So I don't, now this is US. Globally, it might be a different thing, looking at the global picture, but certainly in the US, I can guarantee you, it is clamped down like you wouldn't believe. And I looked at their sale increase from 19 to 20, and it was 18%. So, and that's nothing to sneeze at. I mean, it certainly, but I just don't see that rate of Narcan increasing with the amount of clamped distribution of this poison. I'm just not seeing it, unless globally. But I think that if I had, and I didn't see the breakdown of the Narcan U.S. versus the world, but I bet you we're the biggest consumer of it. If I had to have,
yeah, these guys are selling. I think 90% of their sales are in the U.S.
Yeah, bingo.
Okay. Very high. Yeah.
So, and the other thing was, and not that it's not bad, but I wasn't thrilled about the 41.3 debt to capital. And then what I noticed was when I was reading that they are actually taking on more debt. Well, of course, the money's free now, right? So I suppose it's not a terrible thing. They're trying to staff up. They're trying to gear up for these big COVID production line launches.
Yeah.
But they're taking on debt instead. We don't take on debt. We try to pay it down, right? Well, they're taking it on. They're trying to grow. The one thing that I did like was they did have decent quarterly sales. So it's not in my buy range, even though I really pushed the SSG to the saying, torture the numbers and they'll say anything, and I still even couldn't get it in. So it's if it wasn't contracted, if it was like a permanent thing, but of course, once all this dies down, they'll slowly start, because that's why these companies, Pfizer is using this. After this dies down, then this comes off their books. This liability goes away, and these are the people that have to eat it. So, it's wonderful when it's going up. And then the question is, how much is it going? And I just don't. I'm totally in agreement with Ira. I think this is going to revert to the mean. And thank you very much, Brent.
Okay, thanks, Steve. Excuse me, Liz or Sriram, do you have any comments?
Yes, yes. I just want to say that even it's still outside of my buy range. I think it's close to my sell range. In fact, little above the sell range. Only thing is, I completely agree with Ira and Brent, who talked about this. I think one way, it's not a buy and hold stock, but if you want to keep it as a short-term buy and sell it in 6 months or 1 year with a targeted goal of achieving some profit margin, that may look, especially considering that the recent quarters, I think they're doing. But I agree with Ira and Steve that it is a little bit volatile. It's going extremes, so that scares me.
Okay, Liz, anything to add?
Yeah, so I think I tortured my numbers enough to get it into the buy zone. When I my first go round, I was not in the buy zone. I do like Jack's reasoning that I don't think that the virus is going to go away anytime soon, and I do think that the need for the vaccines is going to continue. I also feel like, I'm not a public health expert, but the fact that Purdue Pharma is not pushing out the OxyContin, I'm not sure that that is going to have a big enough impact, because my understanding is that once people are addicted, if they can't get it from their doctor, they'll get it on the street, and that's where they really run into trouble with the heroin and mixed with the fentanyl and all that stuff. So I think that there's going to be a continued demand for the Narcan. So this brings me to the question of this stock, as Sriram said, it doesn't really fit into our buy and sell. So if we want to go outside of the better investing philosophy and say, okay, let's put some money in this short term and see what happens, that might be a way to buy this. And last month we had talked about getting rid of Athene, and then what are we going to do with the money? So maybe buying this might be an alternative as a short term, but like I said, it doesn't really fit into our better investing philosophy, and it is pretty volatile. It's, I think there's probably other stocks that we could look at that would be more stable, less of a risk. So that's my both sides of the coin analysis.
Okay, thank you. Any other comments on this before we move on to current holdings? No? Okay. Jack, would you mind putting up the current holdings from Bivio just so we have something to look at? Okay, thank you.
Thank you. I thought I'd join this week.
I'll start off with FleetCor Technologies. The one piece of news that I saw was Cambridge Global Payments, which is a subsidiary of FleetCor. They've been selected by the Seafood Industry Australia, a national peak body representing the Australia seafood industry, as an endorsed provider of foreign currency exchange and international payments across Australia. So that, take that for what it's worth, but that seemed to be a promising point. I currently have FleetCor in the hold range. It's $275 per share. The buy is up to 233. Still no refreshed value line from them. Probably next month we'll get one. For Athene, I'll go through just the headlines that I saw, and then we can talk about whether it's worthwhile continuing to hold. But Pension Investments magazines made Athene onto the 2020's best places to work in money management. It was ranked 6th in the category of firms with more than 1,000 employees, and this is the first year that Athene has received that recognition. Other ones were Athene agreed to provide annuity benefits for approximately 70,000 retirees from GE who are currently receiving benefits from GE's pension plan. In aggregate, GE is transferring approximately 1.7 billion of pension obligations to Athene. And then Morningstar has it currently undervalued by 15% to their quote unquote fair value estimate.
Hey, Brent, whose screen do we need to be seeing?
No one required at the moment, but we can go to Jack's screen if he has the current holdings up.
Yeah, I do.
Okay, I can make you presenter then.
I got it.
Okay, so for Athene, I currently have them in a buy range to our buy limits. They're $45 a share. Our buy is up to 49. I know from last week, Jack's minutes reminded me that it was a point of discussion at last month's meeting that I think the Investors Advisory Service had dropped Athene from their their list. I guess looking back at the price trends, it's at $45. We haven't seen that share price since basically, I think since February of last year, 2020. So I don't know that we can accrue much. Yeah, it hasn't grown a whole lot in, unrealized gain, but I wouldn't be opposed to, jumping this if we feel it's a big risk. I haven't attempted to go into the nooks and crannies and determine, exactly how they make their money. And if IAS deems it too confusing, I won't claim to know a lot more than they do. So we wouldn't be selling it necessarily at a loss. It just wouldn't have performed, as well as we had hoped based on when we bought it. So I'll leave that to our buy-sell discussions. And then finally, Tractor Supply. They announced a special appreciation bonus for their team members in its stores and distribution centers, along with a new parental leave policy, which is 6 weeks of paid leave, regardless of the gender of the employee, to support its team members and families. And industry analysts have mentioned that with extended coronavirus effects and many people working from home, as well as just generally staying at home, entertaining at home, lounging around at home, the focus on pets will continue to rise. U.S. pet market, which is now roughly 53 billion, is estimated to grow to 64 billion in the next 4 years, which Tractor Supply is poised to be a beneficiary of, just because of its expanded, at least a pet food line, in addition to other products that it carries. So I currently have it in a hold at $149 per share. Our buy range is up to $66. And that's it for me. We'll go on to Steve.
Yeah, so we'll start with Alphabet. Alphabet is fairly close to its 52-week high. It's $40 below it. I don't know if this number is right, but it's another $46 billion quarter. It was rated as one of the top 10 stocks in Barron's to acquire for 2021. It does have some big issues, bad ones. One, right, they're getting politically tinged. They just removed Parler, the app, from the Google Play Store. They've got workers that have unionized, which is very bad for us, as the investor. Good for the worker, bad for the investor. And of course, big tech is in trouble now that we have a solid Democratic majority in both the House and the Senate. So they're going to be on a warpath. So all I can hope for, I'm going to put the positive spin on it, looking at the silver lining, or the glass half full. And I'm going to take the Standard Oil approach that if they break it up, we're going to do phenomenal. And really, with them making $46 billion every 3 months, these are small problems in essence when you have that much income coming in. And plus, don't forget, they've got moonshots. The self-driving car app, there's all kinds of buzz lately about Apple making a car. Well, somebody's got to put the tech into that, and they've got quite a bit of self-driving tech. So it's in the hold range for me. It does have some headwinds, but with the amount of money they make, not to be Blaze, but Visa, 52-week high, they're $5 below it. I saw a summation of an article and I thought it was perfect, so I'm going to read it to everybody. So the digital payments company, Visa, continues to collaborate with partners as it anticipates a gradual recovery in spending. So they're very involved. They're making sure that they're within all the new payment schemes, and a recovery in spending is going to happen. And plus, who's exchanging cash these days? Everything is electronic. So even though that, and I hate to confess it, but they are in my sell range, even though I strongly advise not to sell it. So that's kind of the Visa update. Also, I did look up the Altman Z number for it, and it's over 6. So they're not going to go bankrupt anytime soon. This is a fortress balance sheet. Thank you.
Okay. Excuse me, Ira.
Yeah, just a quick question on Alphabet. Most of their money comes from search. How do you break that up?
Oh, there's a lot of components. They could split off YouTube. They could split off the car companies. There's a medical thing.
Yeah, but most of
there's
their
all these
money is
apps.
search. If you look at their profits, that's all.
Yeah, no, I agreed, but no, they could take a very surgical knife and chop that up into all kinds. Yeah, no, it's loaded. You know what I'll do, Ira? I'll take that question. Next meeting, I'll answer it.
For your laptop adapter, we might be on the verge of losing you. Okay. Jack, do you have any comments on your two holdings? Are you still with us? All right, we'll come back to Jack then. Liz?
Yes. So I thought that was my laptop that had that notice. Oh, good. Yeah. Okay. So we've got Middleby and Alta. There's not really much to say about Alta. There's no news that I could find about it. I have it. It's in the hold zone. There were a number of SEC Form 4s filed, which is the Statement of Changes in Beneficial Ownership. And I'm guessing that that's pretty standard at the end of the year, where the board buys and sells shares. So like I said, they're in the hold zone. Not much to report on them. And then Middleby, I also have it in the hold zone. There were also a number of the Form 4s filed with them. The big news with them is that last month I reported that they bought Wild Goose filling systems, and then later on in the month, in late December, they bought United Food Service, which is based in China. It's a designer, manufacturer, and supplier of commercial countertop equipment under the brand name Thor, and it has annual revenues of about $10 million. Middleby's press release said that it will allow them to immediately expand their offerings in China while also accelerating new product introductions into this receptive market. Value Line had updated their analysis just this week. They raised the technical rating. Their analyst says that Middleby made strides in its food processing and residential kitchen segments. However, these gains were more than offset by declines in its commercial food service division, which accounts for nearly 2/3 of the top line. And they say that they're cautiously optimistic about the company's rebound in the year ahead. So all told, the top and bottom line should advance 10% and 30 to 35% respectively in 2021. So my question on Middleby is, so they've just acquired two new companies, and I'm just thinking about, like, what does that do to their debt? And is that something that that I should look further into? Is that a concern, or is the idea that they're leveraging in these new acquisitions will pay for the added debt? So that's it for me. Thanks.
Okay, thank you. Sriram?
Yes, for me, the Miller Industries and Intelligent Systems, no major news about these two companies. Both of them, according to my recent evaluations, are on hold. I think both of them were at their 52-week highs within the last week. They dropped off a little bit since then. No value line updates or no updates from any other resources. I think Morningstar, they don't have any. Only thing I saw is for, I believe, this Intelligent Systems. There was something called Schedule 13G was filed with SEC from some investment group called White's Investment Management. I think this is respect to, I think if any company has more than 5% of holding, they need to file this. I think this particular entity has 8.4% of the holding. That's why they had to do this. So can anybody have any insights on what does it mean if a company, if somebody has holdings of more than 5% of the company?
You're saying management has more than 5% holding?
No, I think it's a third party. It's something called White's Investment Management. It's an investing brokerage company, I believe.
I don't know of, I guess, of anything like that. I would think that, well, I wouldn't hazard a guess. I'll leave it to other folks if they want to chime in, but I don't know of any, major concerns or things that we would do different because of that.
Yeah. I just wondering. Yeah.
I would think that if it's a hedge fund and they dump it, it'll tank the stock briefly, or maybe permanently. I don't know.
Okay. Anyway, I don't have any recommendations on it. I don't have any updates. They have both of them. They have quarterly earnings meetings next month. Hopefully, following that, I will have a detailed report on them both.
Okay, thank you. Jack, are you back with us? Still nothing from Jack. All right. Let me see if I can send him a text message. While we wait for Jack, are there any buy or sell recommendations?
Oh, just before we go, so
Yeah.
Jack has put in the chat that he's here. So I don't know, maybe he's on mute or something.
Okay.
It says he's off mute, but it looks like we can't hear him.
He says buy DHI.
Oh, is that the one well, let's see.
That's the watch
Oh,
list.
that's the watch list item.
DH Horton.
Hmm.
And he says buy Essent.
I fully agree to buy DHI Horton. I just bought some personally, actually.
Okay, so we are, I guess we'll take it. Jack, if you can hear us, is there any major news on your two holdings, Dollar General or Sprouts? I guess let us know. But yeah, so we have what, $9,000 in cash that we can figure out what to do with. I'll also put up, do we want to liquidate some or all of our holdings in Athene? We have $15,000 in that. And again, this isn't necessarily a change in their fundamentals. It's just that if other analysis groups are dumping them because of their convoluted business model, do we feel that it's too risky for us to stay in them? So we could dump half of our Athene, get like $7,000, and that would have 16,000 in cash for us to do something with.
Brent,
Yeah.
I'm very worried about the investment advisory service. They stick with quality stuff, and if they
Okay.
don't understand it, that they're out. So that makes me nervous. I wouldn't sell half of Athene. I'd sell 100% of it. So I'm not sure where to put the money. It's certainly not EBS, but I definitely would sell, especially the market is very froth. We're at almost at the peak. I would definitely would sell 100% of Athene.
Okay. Well, we'll put that to a vote then. Anyone else in favor of selling 100% of our Athene holdings? I'd be okay with that.
I'm okay with that too.
I'm okay with it.
Yeah, I would do that, provided, so we're gonna buy DHI and Essent with it. Set.
Well, I'll just separate out, like the first, I think, decision is do we sell some or all of Athene? And then we decide what to do with the proceeds from there.
Because I guess my decision might depend on what are we gonna do with the money? Are we gonna, just keep it in cash, or are we gonna roll it back right into the market?
Hopefully roll it back right into the market. But that'll be kind of the next question, I think. So I'm hearing general agreement that we'll sell 100% of Athene, and I understand, Liz, your concern about, I guess, speak up later if you have concerns that, the proceeds from that aren't being invested wisely, but we'll say sell all of Athene. And then, so that will give us, let's see, a total of like 24,000 cash to deal with. I think the two buy recommendations both came from Jack. One was DR Horton, the other one was Essent. DR Horton has been on our watch list since, what was the date? Yeah, May of this year. It is finally in the buy range. Looks like it's down to $66 a share or so. And then, so we don't have any of that, and I guess we don't have any of Essent either. So one option could be sell all of Athene, split the proceeds, and put 12,000 into Essent and 12,000 into DR Horton.
We have to wait for 31 days, right, for Essent.
For Essent to do the
Right.
wash sale rule or whatever.
Wash sale rule. And is it in the buy range still?
I
Jack says yes.
Okay.
He's typing in the chat here.
Yeah, so I would propose we buy it, making sure we don't hit the wash roll and split the money with Horton.
Yeah, that's reasonable, Ira. Both are housing plays. I think Essent is fairly low, so I think we're getting it at a decent price. This does not seem to be going away. That I kind of poo-pooed it in May, and I was wrong. So this is lasting, and people want more space. So yeah, I don't, and I just checked DHI. I just ran an SSG, and they're in my buy zone. So and I'm trying to do Essent right now. But definitely DHI is in the buy zone, at least for what I just checked.
Okay, so the 31-day rule, I think, would put us at like after the 13th or so of January, I think. I wouldn't. I mean,
I don't know what day it was sold. So
yeah. Okay, well, we can put that on, I guess, when Jack does the transactions.
yeah, and I just did the SSG for Essent, and it's well within the buy range. So both are in the buy zone all of a sudden, and it's funny because the market's frothy as heck. So yeah, that makes sense.
Okay, so the motion, I guess, is to sell all of Athene, then split and buy about approximately $12,000 of DHI and then $12,000 of Essent, with the caveat not to actually execute on the Essent transaction before the 31 days.
Perfect.
I'd go with that.
Second motion.
Okay, and Ira, you're in favor also?
Yeah, it was my proposal.
Okay, thank you. Okay, any other buy or sell suggestions? Hearing none. Okay, and Sriram, you'll capture all of this in the minutes, right?
Yes.
Okay. Wonderful. Any updates to the watch list other than, well, I'll take DR Horton off, Five Below or Viva. I'm assuming Jack didn't mention anything on them, so nothing to report there. Okay. Then moving on in our agenda, I have the reasons to sell checklist. Sriram, you sent a couple of files out by email. Anything that you want to pull up or that we need to talk through?
Yes, please give me the option to share.
Yep, should have it.
Got it. Can you see my screen?
We could for a moment, but we can't anymore.
Okay, let me see. Okay, I have options to show. Bear with me for 1 second. Okay, now you can see.
Yes.
Awesome. So I did, I'm showing you just the updated clean copy. That way it's easy to follow. I captured some of the information that Steve shared with us after the meeting last time. And then I used that information. And also, I think on Thursday night, I did listen to Doug Gerlach's presentation. He he says that focus this as not selling, but replacing underperforming stocks with better options. So again, I think we need to follow the standard process that SSGs and what we are doing, but at the same time, make sure that we will have a better option to either buy something better, like Liz pointed out. I mean, sometimes for a short-term period, even if it's okay to keep it in cash, but it makes sense to basically to have a option to weed out some of the bad performers. So please take a look at this and let me know. I know some clubs do this PERT evaluation. Will give us where we are, and also it forecasts what it is expected in the future. So that's one thing. And one of the things that Doug pointed out is this pre-tax profit that also give you, if you're watching this on a quarterly basis, it gives you an option to forecast better. So anyway, please take a look at this. If you're all okay with this, we will keep this as our continually guiding document. That way we can update it and use it as needed. Any questions?
The other attachments that you sent were just like supporting tools and
Yes.
forms for this? Okay.
Yes. The couple of forms that Ira sent has, again, some of the ways we can keep track, especially the PERT evaluation. And I think I also added a challenge. So again, those are a little more involved and a little more technical if we want to get it. But again, those are good resources for us to make better decisions.
Mm-hmm.
As far as balancing the portfolio, I think it was mentioned that the best way is not so much to sell things that you own, rather to look at, if you're doing new purchases in sectors that you don't have, consider that as one of the factors. So I wouldn't necessarily have balanced the portfolio as a sell type decision, more like an acquisition decision. And also number 4, I would hesitate to sell on valuation alone. Although it's a consideration, I would be very cautious. I'd be very slow to sell based just on valuation as opposed to fundamentals.
Yeah, no, actually, I think one of the points everybody made in all their presentations is our philosophy. If we do our job right, we should be buying and holding them unless something drastic happens for that company. So having said that, I agree with you. We need to focus on what can replace for us to give. I think I inserted this as number 1 here. What can we do to improve our stock portfolio today? I think if we focus in those terms, I believe I agree with you. We don't need to have, but again, remember the discussion we had about the EBS today, that may be something, if it's in a short term, you want to keep an eye on it and just use it for a 6-month period or something, makes sense. But you all know better than I do about these things. So, any other questions? Any other points of discussion?
Bonnie asked if this could be made a handout. Unfortunately, we already have our maximum of 5 handouts for the month. So if we finalize it next month, we can make it a handout then.
Yes. I will put it in the public folder once we finalize it. Jack said
Okay.
this looks good. Thank you, Jack.
All right. Thanks, Sriram.
Thank you.
I will jump back to the agenda. I'm going to skip the club financial audit for the moment and just wrap up the other things, just so if people are not wanting to stay through the entire audit, they can jump off. But I figure we could look at the club calendar also, just because it's a new year. Let me pull up the. Okay. So we're in January, we have the audit, the calendar. February, we think K1 tax statements will be sent out. We discussed before the meeting, the Bivio accounts will be up for renewal in a couple months, but Jack will be handling that. Club taxes due March 15th. General taxes are due for club members. And then the only other things that we have are, I made a note that club renewals will do sometime in September. This was the date from 2020, so I'm not sure exactly what it will be in 2021. Reviewing our club watch list, and then back in November again, review our holdings, and then December election of new officers. Any other major milestones that we want to add to the club calendar? Okay. And then back to the agenda for next month, I'll be presenting the stock to study. Liz, I have you for educational segment. As Jack mentioned from our minutes, I'm working with Sharon to have a stock ready to present in March. And then Shriram's on the hook for education segment in March. And then we have, I left open a June slot, but we may just do the regular rotation of club members. So some discussion left on that. And then as a note, the next 4 meetings are scheduled in GoToWebinar. Those are the dates shown at the end of the agenda to mark your calendars on. Is there any other business before we get into the financial audit?
I would
yes,
note that
Brent.
Sharon is here today. And also, Bo asked a question about the wash sale rule. You may want to explain that to the general group if anybody else doesn't understand how that works.
Well, my understanding is that it's a either 30 or 31 day rule that you to be able to like reap capital losses, you can't sell it one day and then turn around and buy it again the following day without accruing kind of a tax penalty. So I believe is it the IRS that requires there at least to be a kind of a waiting period of 31 days between when you sell a stock to reap the capital loss and when you can buy it again. So at our December meeting, we decided to sell Essent. That started and then I don't remember exactly when that sell transaction went through, but once that transaction went through, that starts the 30-day timer.
On December 14th.
December 14th, okay. So then we want to buy it back, and that means that from our decision today, Jack will just have to wait until, what, January 14th, 15th, something like that, to be able to buy it back so that we avoid any penalties on that. That, in a nutshell, is the
There's
way
also
I
a
understand it.
requirement 30 days before as well as
Yes.
30 days after.
Yes.
In other words, if you're buying the stock 30 days before and playing games with it and going to sell it, you could not take the loss.
Basically, it's
Okay.
a 60-day window.
Yeah.
Okay. I think, was there someone else that had brought up a concern
Yeah.
or, yeah, Steve.
Brent. Yeah. So, just one thing, I wouldn't buy before January 16th. Just make it 32 days. So there's absolutely, it's ironclad. There's no stepping on the rule whatsoever. So I would just go with the 32 days. That way we're 100% in compliance. The other comment I have is that it was brought up that if a third party entity has over a certain amount of percentage in a public company, they have to tell the world that, yes, we just bought a huge chunk of this company. So I think that's a prime candidate for an educational segment. And it just should go into, if we have an educational segment bucket, that should be one of the topics that's covered.
Okay, that's good feedback.
The 16th is a Saturday, Steve.
Yeah, I think.
Okay, well then make it the previous, then the next Monday. Don't
Yeah.
shave it too close.
Okay, anything else? All right, so I'll mention just now, if people don't want to stick around for the financial audit, thanks for attending. I'll put Sriram's contact information back on the screen here. Our next meeting is February 13th, 11 a.m. Eastern. Again, here's the link to subscribe or register to get the login information for the series of meetings. And if there's additional questions that you have or you're interested in joining, reach out to Sriram at this email address, and he'll be happy to answer any questions that you have. Feel free to stick around for the financial audit. It just might not be the most exciting thing for you to participate in, and we're already at almost the 2-hour mark currently. Okay, so then we'll move on to the audit. Jack already uploaded the financial documents to Bivio. What I'm thinking we do, Steve, if you have access to your computer, maybe you and I can open up the 2 segments of our holdings. You can do Bivio and I can do TD Ameritrade and Fidelity, and then we just read off the values to make sure they match and take any notes that we can then ask Jack and Ira about later. Does that work for you?
That works. So which one did you want me to open? The Fidelity one, or?
Are you in Bivio currently?
I can be. Yeah, I'll log in right away.
Okay. Yeah, if you can log into Bivio and then go to the file structure, there's a financial audit folder and the 2020 subfolder under that.
Okay, so I'm logged in. So you just explained where to go, but I'm sorry. Just say it one more time.
Yeah. So up at the top, there should be like a communications.
Yes. Right.
Folder. Go to
Okay.
files. Yep.
Yep.
And then
Got it.
under that financial audit folder. And then 2020 subfolder under that. And then in that 2020 folder, the very first file is the audit form for a tax year that we can just kind of follow along.
All right.
I
just downloaded it and I'm opening it now. Yeah. Okay.
Okay. Basically, it's, I think, what, seven main steps that walk us through where we can, if there's any anomalies that come up, we can note them and then talk with Jack and Ira separately. But
that's exactly right. Yeah. So number 1 is verify cash balances and number of shares of stock start at start of tax year.
for prior tax year. So he should have put the 2019 statements into this file. So if you want to open maybe the TD Ameritrade December 2019, I can open the Yankee chapter or the Bivio one from 2019.
Can you guys hear me yet?
Yeah,
Yes.
now we can.
I'm back.
Can you hear us?
Yes.
Okay, welcome back.
Do you see my screen?
Okay, so
Yes, for the audit form. Yep.
Yes.
Okay, let's see.
so Brent, did you want me to open up step one, the TD Ameritrade statement, December 2019?
Yes.
I've
And
got
then
it.
I have opened the Bivio, our valuation from Bivio for December 31st, 2019. So I think this is just the cash, end of year cash balances and number of shares. So I will read off what we have in Bivio, and then if you can confirm what you are showing in TD Ameritrade. For
Yeah, give me a
cash,
second to
Okay.
orientate here. I'm trying to find there should be so we're looking at totals. Total stock, total cash account here. Okay, I got it. I got the lines. Yeah. All right.
Okay, we'll go over cash, and then I think we can just step through the number of shares of each of the holdings. That should be
Okay.
in there.
Yeah, I see that displayed. Yes. Yeah.
Okay, so for cash, I had $883.65.
Hmm. I'm showing, and I don't know if this is right, $826.78.
Okay.
Oh, wait a minute. Here we go. Sorry. 883.65.
Yes.
Okay. Sorry. Looking at the wrong line. Now I found that amount, and it's under closing balance.
Yep. Okay.
Yeah. Okay.
That
Yeah.
should match. Okay.
Yep. That matches.
And then let's walk through. Can you get to the section where each of the holdings and the number of shares are shown?
Sure. Yeah. Yeah. Okay. Okay. So for Alphabet, there's 6 shares for GOOG and 6 shares for GOOGL. For Athene, there's 300. For Dollar General, there's 100. For Essent, there's 322. For FleetCor, there's 38. For Gentex, there's 363. For Lithia Motors, there's 123. For Protolab, there's 84. For Regeneron, there's 27. For Tractor Supply Company, there's 85. For Ulta, there's 30. And for Visa, there's 60.
Okay. Yep. All those match perfectly with what I have from Bivio also.
Okay.
I'll go ahead, I guess, Jack, and I'll save a copy of this audit form and just take notes as we go through.
Good.
And then we'll just figure out a way that Steve can sign off on it as well.
Yeah.
Give me one
Just
second
fax
here.
it to them if fax exists anymore.
Yeah. Let's see.
Oh, looks like I have to sign it too. Last page.
Okay.
Especially if I've been bad.
Right. Okay, so I will call that as step 1 is done. And records agree. No audit notes. This isn't the easiest to fill out real time, but I'll go back and clean it up a little bit. Okay. Step 2, check end of year cash. So we'll do the same thing, but now for the end of year 2020. So that if you could do the same thing, and this is going to be a little bit more, well, I guess you're now changing now to Fidelity because we changed brokerages, Steve.
Right. So it's just it's very clearly labeled in the directory. It's step 2. So I just
Yep.
opened the PDF. I'm assuming
That's right.
Yep, exactly. So for the end of year cash balance for Fidelity Investment for 2020, I have $8,893.00.
exactly ending balance. That's exactly right. Yeah.
Ending balance. Yep. Okay. And then if you want to do the same thing as rattle off the securities and the shares. Mm-hmm.
Yeah. Okay. Make sure I get Okay. 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 I've got it, but I just wanted to scroll the whole document just in case there was another section or something. But no, it's very obvious. Okay, holdings. Here we go. Athene, 340 shares. GOOG 6, GOOGL 6. Dollar General 100 shares. Fleet Corp 38 shares. Gentex 363.0 shares. Intelligent Systems 360 shares. Middleby 203 shares. Regeneron 27 shares. Sprouts.
You skipped Miller.
Yeah.
Okay. Yeah. Very possible. Miller 203. Regeneron 27.
Can you just re-verify what the Middleby quantity was? MIDD?
127.
Okay.
Yeah. Okay.
Sorry, the eyes did a skip there. Sprout 429. Tractor Supply Company 97. Ulta 33. Visa 60.
Okay. Those match as well. Let's see. Then step 3, verify income received. Step 3. So, Jack, was this the we might have a partial because we don't have the full story from TD Ameritrade on this?
The brokerage statement, I think I made one. Let's see if I did. I think I made one for Fidelity of all the dividends received, but I'm not sure I have that for Ameritrade, right?
Yeah, it looks like you have an Excel file of Fidelity dividends. I think that covers us like August to December or so.
Yes.
So
I
I think,
yeah.
Go ahead.
Yeah, I have a Fidelity list, dividends list, and a Fidelity statement.